Welcome to the deep dive. Our mission here is pretty straightforward. We take a stack of sources, really dig into them, pull out the most important bits of knowledge and insight, and basically give you a shortcut to being, properly well-informed. We're not trying to drown you in data, just offer clarity, maybe some surprising facts, and hopefully keep it interesting. So today we're diving deep into a really comprehensive snapshot from the Economic Times. This is specifically from Monday, June 30, 2025. And this deep dive, I think, is going to reveal some genuinely surprising stuff. It should help you quickly grasp the key economic and business currents flowing through India and, frankly, how they affect things globally.
Absolutely. And, that's the real value of looking at a single day's news compilation like this. It's so much more than just headlines. What you get is this kind of mosaic, right? Real-time market moves, corporate strategies playing out, new tech popping up, global influences. It's all happening at once. Our job here is to connect those dots for you, show you what really stands out from all this information.
Okay, let's unpack this then, starting with sort of the big picture view of India's economic story. I mean, the main narrative that just jumps out is India really emerging as a global manufacturing hub. You've got the Mahindra Group CEO, Anish Shah, saying very clearly that India has this massive growth opportunity. He points to the young workforce, infrastructure getting better, and supportive government policies.
Yeah.
That feels like a strong base case, doesn't it?
It does. And what's interesting is how the finance minister, Nirmala Sitharaman, well, she echoes that confidence. She actually uses this great phrase, saying the reforms express is set to run nonstop. And she adds that urban consumption isn't really a worry. Now, that's not just talk, right? It signals a real government commitment to keeping reforms going, which creates a more predictable environment for businesses thinking about long-term investment. That's what India Inc., really needs.
Right. And for a really concrete example of that confidence, just look at the Mumbai property market. It just had a record-breaking first half of 2025. And this boom, it seems, is driven by strong demand from home buyers, but also lower loan rates and those big infrastructure upgrades. The numbers are pretty stark. Over 75,933 property deals registered. That's up 5% year on year. And maybe even more telling, the stamp duty collected 6,727 crore. That's nearly $1 billion just from property taxes in one city in 6 months. Tells you something about the market's heat. Okay, and here's another really interesting insight I pulled from the data. Big money is making a beeline for Indian hospitals. Maybe a bit surprising. But yeah, hospitals seem to be a hot investment target now. We see Manipal Health bidding for Sahyadri hospitals and private equity firms pouring money into these single specialty chains, particularly outside the big metro areas. The whole sector's market cap has surged. And it kind of makes sense when you see the government pushing medical tourism, trying to position India as a global healthcare destination.
Yeah, and if you connect these different growth areas, manufacturing, real estate, healthcare, what's really fascinating is they aren't happening in isolation. They feed each other. Manufacturing creates jobs, right? That boosts spending, drives property demand. A healthier population means a more productive workforce. This interconnectedness, that's the real story here, I think. It points to something maybe deeper, more resilient in India's economy than just a few booming sectors. It suggests broad confidence.
Okay, right. Let's shift gears now and look at the live market data from that day, June 30th, 2025. This gives us that immediate pulse. So on that specific day, the benchmarks took a hit. The Sensex dropped over 550 points. Nifty went below 25,500. Okay, that's a day's picture. But then the report throws in this surprising historical fact. Despite the daily ups and downs, they call it July's magic touch. Apparently, the Nifty has only failed to rise in July once in the last 10 years.
That does raise a key question, doesn't it? How do you square that day's dip with this really strong historical trend for July? What's your take? Is it just noise, a blip? Or maybe a sign of some underlying nervousness despite the good economic signals we just talked about?
Well, it definitely highlights the volatility, yeah. But maybe it also points to that underlying resilience, and expectation that things will bounce back, which keeps investors in the game. And that actually ties into another really intriguing market insight from the report. The 6,000-point Sensex rally overshadows the market's real story. Small caps are staging a revolt. I love that phrasing, staging a revolt. It really suggests that while everyone's focused on the big index numbers, the real action, maybe the bigger percentage gains are happening with smaller companies. It suggests the rally is broadening out, maybe more retail investors jumping in, or specific policies helping these smaller guys. Could be where the next wave is building. Now, for anyone tracking specific opportunities, the Economic Times has its upside radar. And it's pointing to some pretty compelling potential. For example, financial services showing up to 67% potential upside. Real estate, which we just mentioned, right up there with 65% upside, likely driven by that continued city growth and infra spending. And pharma, another area we've seen big strategic moves in, showing up to 41% upside. Those are some serious numbers. Gives you a sense of where the smart money might be looking. And beyond those broader trends, the report flags some really massive corporate deals. These show serious long-term strategic thinking, like Torrent Pharma agreeing to buy a controlling stake in JB Chemicals from KKR. The valuation. Around 25,689 crore, that's about $3 billion US. And this isn't just any deal. It's said to be the second biggest acquisition ever in Indian pharma after Sun Pharma and Ranbaxy. So a huge consolidation happening there. Then you've got AM Green BV buying Oryx Core stake in Greenco Energy Holdings for, USD 1.28 billion. And their stated goal is building a large green energy platform, renewables, green ammonia, a massive bet on sustainable power's future.
Right. And what's striking about these deals is just the sheer scale, but also how strategic they are. These aren't quick flips. They're long-term investments in sectors absolutely pivotal to India's future pharma, green energy. Companies are putting down billions, even with daily market swings. It's a massive vote of confidence in India's long-term path.
Moving beyond the traditional markets now, let's look at the cutting edge and also some of those global ripples affecting things. First up, we really need to talk about fintech's impact on credit access. The numbers here are just, staggering. Fintech non-banking firms, they sanctioned 10.9 crore personal loans. That's 109 million loans, totaling over 1 lakh crore rupees in fiscal 2025. These lenders are clearly dominating loan volumes now, especially meeting that huge demand for smaller loans. And what's really significant, I think, is who is driving this growth. Younger people, folks in smaller towns, and it's also boosting women's access to credit.
Yeah, connecting that to the bigger picture, it's a clear example of technology democratizing finance, isn't it? Reaching people who were previously left out. Massive for financial inclusion. But, it does raise questions, too, about regulation, potential risks. With such fast tech-driven credit growth, something regulators are surely watching closely.
Definitely. And then there's the AI race. It's heating up everywhere, but India seems particularly engaged. There's stats saying 9 out of 10 Indian employees are already embracing Gen AI tools. That's way ahead of the global average. And on the sort of future-gazing side of AI, Sam Altman from OpenAI had this really interesting comment. He said, current computers are not designed for AI. Now, that's more than just an observation, right? It's a huge signal. If today's computers aren't right for AI, what does that imply? Massive future investment needed in specialized chips, quantum computing, even energy infrastructure to power it all. Huge potential markets opening up there.
A fundamental shift, potentially.
Exactly. Now, something more down to earth, consumer-facing, quick commerce companies. The report says they're adding more and more fees. We're talking platform fees, handling charges, convenience fees, even fees for small orders, or, get this, rain levies. It's clearly an attempt to make those super fast deliveries actually profitable, shows the tough economics of that very competitive business model.
Yeah, the unit economics challenge. It's real.
And of course, you can't ignore crypto. Always buzzing. Bitcoin seems to be holding steady around, $107,000, $108,000. You've got Robert Kiyosaki, the rich dad, poor dad guy, calling Bitcoin priceless and predicting it could hit $1 million by 2030. That's quite a call.
A very bold call indeed.
But maybe more indicative of mainstreaming is the regulatory movement. The U.S. Senate has cleared a path for stablecoin regulation, and the total market cap for stablecoins has hit a record $251 billion. That's serious money. And it's not just tech folks anymore. You even see figures like the Trumps getting to crypto promotion, specifically Bitcoin mining. It just shows how far it's spread into public awareness.
This whole mix, the big predictions, the regulatory steps, the broader public figures getting involved, it really does raise that big question about the future of money itself, doesn't it? Crypto, especially stablecoins, seems to be pushing deeper into mainstream finance talk. It signals a potentially significant shift, even with all the volatility we still see.
Right. And just a quick mention on global trade tensions, always a factor. There's a headline, Trump's tariff bullying is working too well in Europe. Apparently, the WTO observed that global trade actually picked up because fears about future tariffs made companies import faster. Kind of an interesting counterintuitive effect there.
Yeah, unintended consequences. Always happens in trade.
So we've looked at the big economic shifts, the market moves. But the Economic Times also gives us these fascinating glimpses into how these massive trends actually touch our everyday lives. How we work, travel, even what we think is healthy. The ripples are everywhere. Take travel, for instance. The rise of digital nomad visas, over 50 countries offer them now post-COVID. That's not just a cool trend. It's creating new economic patterns for remote workers and the places they go.
Absolutely. New mini economies popping up.
And then Australia's unique climate visa. offering residency to people from Tuvalu because of rising sea levels. That's a stark look at climate change, already reshaping migration and policy. Over 4,000 applied, though they only take about 280 a year. Shows the pressure building, and it may be closer to home for many listeners, that proposed EU rule to scrap extra charges for small cabin bags on flights from July 2025. Seems small, but could really change airline pricing and how we pack.
Yeah, little things can have big impacts on costs and behavior.
The report also had some health and wellness tidbits. These are increasingly big business driving spending and investment. Apparently, research suggests mushrooms can lower cancer risk. Flax seeds are good for weight loss and gut health. There's even a specific diet backed by science that might outperform the Mediterranean diet for preventing diabetes. And a Stanford doctor recommending 6 drinks for gut issues. Again, these aren't just tips. They reflect this booming wellness economy. People spending on specific foods, supplements, health services. But a note of caution, too. Experts warning against that water-only fasting trend, citing potential dangers, shows that tension between wellness trends and actual science.
Exactly. And what's so interesting is seeing all these things together, global trade, travel rules, personal health choices, all in one business paper. It really underlines how interconnected everything is, how big societal trends filter down and shape markets and investments.
Mhm. And finally, let's touch on the changing world of work, the career landscape. It's definitely in flux. 7 out of 10 Gen Z professionals in India willing to jump jobs for better pay. That shows a really fluid, opportunity-driven labor market. And blue-collar gig work. Hiring jumped 92% in 2024. Just explosive growth in the gig economy's role. But there's a challenge highlighted too. A report found 71% of manufacturing MSMEs, small, medium businesses, said government skill training schemes weren't helpful. That points to a really critical gap, right, between training offered and what industry actually needs. Impacts productivity long term.
A major disconnect that needs addressing.
And just as a final kind of provocative thought on careers, Zero's Nikhil Kamath made this bold prediction. He believes only one skill will really matter to stay relevant in the job market 10 years from now. The source doesn't say what skill, unfortunately, but just the idea itself, that things could narrow down so dramatically. That's pretty intriguing. Makes you wonder what it could be.
Definitely food for thought. Adaptability, maybe. AI fluency.
Who knows? So, okay, what does all this mean for you, listening in? We've journeyed through quite a bit. Billion-dollar deals, market swings, the future of AI, how finance is changing, even down to diet trends. It's amazing how much insight you can pull from just one day's news if you connect the pieces. This deep dive, I hope, has shown not just what's happening, but maybe some of the deeper currents driving these changes across India's economy and how it fits into the global picture.
Right. And remember, knowledge is really most powerful when you think about how it applies. As you mull over all these different bits of information, consider just how linked they are. Geopolitics hitting market sentiment? Yeah. But also someone's diet choices influencing healthcare investment trends, or a government policy completely reshaping an industry. What other connections might be hiding there in plain sight, waiting for you to spot them in your own world?